All right, so you're ready to jump in and start investing in Nigeria. That's awesome. But then you're hit with the big question. Where do you even begin? That first choice can feel huge. So today, we're going to break down two of the most popular starting points to help you find your footing. You know that feeling of being completely overwhelmed? Yeah, it's totally normal. You decide you're going to put your money to work, and bam, you're hit with this wall of jargon and a million different options. Don't even worry about it. We're going to cut right through all that noise. You know, we can actually make this whole thing a lot simpler, because all that confusion kind of melts away when you stop looking at all the options out there and you start by asking one simple question about yourself.
And that's it. That's the real question. Are you a hands-on adventurer who actually enjoys doing the digging? Or would you rather have a guided tour with an expert behind the wheel? Your answer right here, well, it changes everything.
So here's our game plan. First, we're going to explore path number 1, the wild, exciting world of penny stocks. Then, we'll check out path number 2, the steady, guided road of mutual funds. After that, we'll put them head-to-head so you can really see the differences and decide which kind of investor you want to be.
Right then, here we are at the crossroads. For a new investor in Nigeria, these two paths are pretty much your most common starting points. So, let's head down the first one, shall we? Okay, this first path is for the adventurer. We're talking about the person who wants to get their hands dirty, do their own research, and take direct control of their investments. If that sounds like you, you're definitely going to want to pay attention to this. So, first things first, what exactly are we talking about here? Well, in the Nigerian stock market, a penny stock is basically just a stock from a smaller company that trades for a really low price. We're typically talking 5 naira or less per share. Simple as that.
So what's the big appeal? Well, for one, they're super accessible. With just a small bit of cash, you can buy a whole lot of shares. Second, because these are smaller companies, they have massive room to grow. And since they kind of fly under the radar of the big shot analysts, you might just be the person to uncover a hidden gem before anyone else does.
Just look at the raw power of percentage growth here. For a stock to go from 1 naira to 2 naira, it just has to gain 1 single naira. But that's a 100% return for you. Now, think about a huge blue-chip company trading at 800 naira. For you to double your money, it has to gain another 800 naira. That is a way tougher climb. This potential for absolutely explosive growth, that's the real siren song of penny stocks.
But, and believe me, this is a big but, that sword is double-edged. High potential for reward, as you know, always comes with high risk.
So let's be real about the risks you're signing up for. First up, volatility. A price that can shoot up 50% in a single day can also plummet 50% just as fast. Second, there's just less information out there. And that means the due diligence, the hard work of checking if the company is actually healthy and has a future, that is entirely on you. You have to become the analyst.
All right, let's check out our second path. Now, if all that talk about high risk and due diligence felt a little intense, then the professionally guided journey of a mutual fund might be more your speed. This is really for the investor who wants to be in the market but would rather hand the map and the steering wheel over to an expert.
So, what is a mutual fund? At its core, it's a collective investment. Think of it like this. You and a whole bunch of other people all pool your money together. Then, a professional fund manager takes that big pot of money and invests it for all of you in a wide variety of stocks and other assets.
It's a pretty straightforward 4-step process. 1, you put in your capital. 2, the manager makes all the investment decisions. 3, the fund buys a diverse mix of stocks, spreading the money around. And 4, any profits are shared back among you and all the other investors. You're basically buying a small piece of a very large professionally managed pie. The big appeal here is really all about security and convenience. You get instant diversification. Your money isn't just in 1 or 2 companies, it's spread across many, which is a lot safer. You've got professionals making the tough calls, the whole thing is regulated by the SEC to protect you, and you can usually get your money out pretty easily when you need it.
Okay, but we have to be crystal clear about something. Safer does not mean risk-free. Absolutely not. Having a professional manage things reduces risk, for sure, but it can't just make it disappear. If the entire market takes a nosedive, the value of your fund is probably going to fall too.
And this brings us to the fundamental trade-off. When you hand off the decision-making, you also hand off the learning experience. You don't get to develop that hands-on skill of analyzing companies and picking individual stocks. Now, for some people, that is a price well worth paying for the convenience. But for others, it feels like a missed opportunity to learn.
Okay, so we've walked down both paths. We've seen the good, the bad, and the risky.
Now, let's put them right next to each other to make this choice as clear as it can possibly be.
Let's break this down. Risk level, it's high for penny stocks, but lower for mutual funds. What about your control? With penny stocks, you are in the driver's seat, full stop. With mutual funds, the manager has the wheel. This means your time commitment is high for penny stocks and low for funds. It really all boils down to the key benefit. Are you chasing that massive growth potential, or do you value diversification and professional expertise more? The adventurer versus the guided investor.
And what do you know? That brings us right back to where we started. Back to that one simple question.
Look, there is no single best choice here. There just isn't. The right choice is the one that actually fits your personality, your financial goals, how much time you can realistically commit, and honestly, how much risk you can stomach. It is a deeply personal decision.
So, you've seen the paths, you know the risks, and you know the potential rewards. The only question left is, which one are you? Are you the adventurer hunting for those hidden gems, or are you the guided investor, leveraging professional expertise to build your wealth? Your journey starts right now. Which path are you going to walk first?